Netflix climbing back towards those 2021 pandemic highs as it shifts focus from growth to profit. And my next guest thinks its ad tier can take the stock to new highs. Joining me is Alicia Reese. She's a VP of Equity Research at Wedbush, covering media and entertainment. Alicia, it's great to see you. And you think their earnings tonight will be part of this story?
I do. I don't expect a blowout beat necessarily on the earnings tonight. I think Netflix is poised to come in line with expectations, more or less, and expectations are fairly high. What I'm excited about is the third quarter guidance. I think expectations are relatively in line, Q3 to Q2 to Q3. And our survey work indicates that there's going to be an acceleration from quarter to quarter, despite the Olympics. I think part of that is due to Netflix's shoulder programming around the Olympics, like Sprint and Simone Biles Rising and some other content that they have produced or licensed over the past few months. They have some really nice content out, really nice balance of original and licensed content right now. And I think on the earnings front, they're poised to beat as well, just because they've been really productive with content, really buying an efficient balance of that original and licensed content, as well as international content.
And talk about the importance of this ad tier. Do they make more money on the ad tier or more money on the subscription tier?
Well, currently they're making more money on the subscription tier. I think they're nearing accretion on the domestic, the UCAN region ARPU with the ad tier. I think they're still dilutive with the other regions. I think that's going to take some time to catch up. But I think overall, you're going to see accretion in 2025, possibly by year end this year. The main benefit of the ad tier, though, is that it limits churn. So that's why you've seen, some nice net subscriber additions over the past year. And I don't think that ends. I think on top of that, you're going to layer on profitability. And, in spite of that, Netflix has still been able to expand ARPU. And a lot of that was the password sharing crackdown. They're able to add family tier members on top of that, which is incremental ARM. And then they're also able to, raise prices selectively. And that's really helped ARPU. The next leg of growth is that ad tier, though.
That's fascinating that basically just the existence of the ad tier, a little bit cheaper one, means people are less likely to cancel. It's less of a big deal. They can kind of just, it's kind of like people who go to Planet Fitness. They go, okay, I go once a year, I can keep it. It's cheap enough. So the stock was all-time highs were around 700 now. Do you think it goes back there? How quickly and what's the proper valuation?
Right. Yeah, we do think that it can go back. Last year, we had Netflix on our best ideas list, and it basically doubled over that time. We have taken it off our best ideas list. We still think that it will rise, just not at the same pace. Expectations are high, and a lot of that is priced in. That said, once the ad tier starts becoming incremental to profitability, and that may happen as we don't get the subscriber numbers anymore. So we do have to wean ourselves from those subscriber numbers coming up in 2025. But I do think they'll be able to show enough profitability to keep those shares rising into the 700s and above.
All right.